Hello everyone, welcome back to our news trading session. And obviously we're dealing with inflation and a lot of volatility in the market. So let's get started. Audio seems to be coming through okay from my side at least. But yeah, let me know if there's any issues. Okay, good. Okay, everything is good. Let's get started with our news trading session, and we are going to be covering the inflation number or the CPI numbers. My name is Vera in general. Let's get this started with a quick disclaimer here. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility, and we are looking at the most extreme market condition in the past 50 years. And market reaction to news can be swift and unpredictable, like how you saw the move last night. And this could lead to higher trading risks and delays in order execution. So be attentive when determining the volume of your transactions and consider all possible risk factors. Okay. So just a little bit about myself. My name is Pedro Injero, and I've been a full-time trader with over 20 years of experience. And I've also been a professional trading coach and technical analyst for several global brokers, and that's since 2007. So that's a very long time, right? 18 years in the industry. Yeah, my expertise is in the Ichimoku Kinko Hyo technique, and I've been invited as a guest speaker in trading investing expo across Australia, where I'm based at, investor in Singapore, as well as the ATAA and the APTA conferences, which is the Australian Technical Analysts Associations. Okay, I'm going to show you the code to W deposit as per usual. And then, for those that are new and you registered through Octa's website, you should have received an email with an invite to the private Telegram channel. If not, please contact customer service, or if you have attended previous sessions, you should already be in the Telegram channel. All right. So this is the code, it's NonFarm2025, and I'm pretty sure it's a one-use code, so just skip it. If you want to use the code when depositing, use the code NonFarm2025. It is expiring on the 31st of December 2025. Okay, so yeah, we'll go through the theories very quickly. Again, this month, it is a very different month, and last week's NFP numbers, we did things differently as well. I gave you an explanation into what is to come into the market last Friday, and as I say, that was basically the first day of a technical bear market in the global equity markets. And you can see the meltdown on last Monday. It does affect the global market, so hopefully you guys are okay with that because a lot of money got wiped out in the market because of what Trump did anyway. It causes a lot of volatility. And obviously, the focus here tonight, it is a lot more important than the labor numbers that was released last Friday. So we're going to be looking at the inflation number. And there's a lot, a lot of back and forth the past week. Not even the past week. I would say the past 3 days, in terms of what the FOMC's expectation is, and also, why we're looking at this number here. Is that going to change stuff? It really depends at this point in time, so we'll break it down later. But let me explain quickly what is inflation. Inflation is the rate at which prices for goods and services rise, and the most commonly used inflation index are the consumer price index, and also we are going to be looking at the core inflation number or the core CPI numbers as well. Yeah. If you're wondering, again, if you take a look at it, it's actually not that hard to kind of figure out what inflation is. It basically means that every year things are just going to be more expensive. And if the inflation is really high, then things are going to be more expensive really quickly. But that's pretty much it. It's a constant. It's not going to regress or anything like that. Even with a negative inflation, price do rise eventually. So, this is something that you can't avoid. And is it necessary? Is inflation good? I think that's a question a lot of people are asking. Is inflation good? Then I would say inflation is good for economic growth. But something that's too high is never too good, right? Anything that's too much, it's never too good. It could do, it could harm everyone if it's too high, and there's a reason why it needs to be controlled. And if the inflation is too low, then we would call it deflation. Then it would also kind of slow down the economic growth. So that you need to kind of strike the right balance between inflation. What is that balance, if you guys are wondering? Because if you saw the news, central banks are going to be targeting a certain band. That target, it's 2 to 3%. That's a good inflation. Anything beyond or below that, it's not really a good inflation number. Okay, so CPI is a critical indicator of pricing pressures in the economy. It provides you with a gauge of inflation, and forex traders basically monitor the CPI because it can lead to changes in monetary policy conducted by the central bank, which can either strengthen or weaken the currency against the rivals in the market. Now, CPI, if you take a look at what CPI is, the breakdown is very simple. It measures the cost of living, right? And a lot of these items are basically the basic necessities that are part of the CPI. So, if you have extra money and you want to buy a Rolls Royce or a Rolex or, luxury bags or whatever, those are not going to be in the CPI numbers because they're not really basic, necessities. Foods are going to be included. Some of them obviously are going to be excluded in the core. But yeah, food, toothbrush, toothpaste, your shampoos, your soaps, whatever, whatever that's necessary for someone to live. And the higher the CPI numbers, it actually kind of measures the standard of living as well. Okay, so it does include a broad range of goods and services purchased by consumers. So it's not just it's not just a product. Services are actually included in the CPI numbers, and if you take a look at the breakdown, the CPI, there's CPI on services as well. And sometimes it goes up, sometimes it goes down. All right, includes international personal consumption items, so any items that you import, it's going to be included in the CPI numbers. And scope exclude changes in the interest rates or costs. Okay, very simple as that. Now, the PPI, it measures the real growth in output. PPI is from the producer's side, right? So CPI is consumer side, PPI is the producer's price index, and it measures real growth in output. It basically tells you how much it costs to produce an item, right? As simple as that. And obviously the PPI numbers, if it goes up, CPI will eventually go up to kind of match up the PPI. So these two, which one leads? It's always a PPI that leads, but it's measured differently and it's monitored differently. If you take a look at the PPI, it's just the cost of producing goods, and this cost of producing goods, could be impacted by a lot of stuff. For example, the tariffs that we have right now in the US, right? If they have components, if they have parts to produce a car, for example, they're going to be taxed 25%. If the car is, importing aluminum and steel because cars are not made of plastics, then they get an extra 20% of that. So the cost obviously is going to go up. So there's a high chance the PPI could actually be skewed in the next few months. So just keep that in mind. There's a lot of other factors in here as well. And obviously this is going to get passed down to the consumer. And then the CPI is going to go up because everything all of a sudden becomes more expensive. So there's a severity of this whole tariff issues right now. It's pretty real, and that's the reason why I said last week that we are actually in day one of a potential new global financial crisis, which a lot of people kind of name it trade war 2.0 or whatever. We just don't have a name for that as right now because it's just a single guy pranking the whole market as it is in the past 3 days. All right, the PPI doesn't include imports. see, this is where it gets a little bit different there. The PPI doesn't include imports being calculated in there, but obviously the cost to produce something has import tariffs on it. And it just becomes a final number in there. What the PPI doesn't include imports here is obviously if if they're importing foods from overseas and then distributing it to in America, those are going to be excluded from the PPI. But if something or a component is taxed, then obviously it does include imports. So it might be a little bit misleading here, and it might be confusing to look at it in that context. All right, encompasses services with prices including an interest rate component. So this one here is a little bit more on the balance side because there's an interest rate component in there as well. Okay. So what is the core inflation? Core inflation refers to the change in prices of goods and services, excluding those from the food and energy sectors. This one takes away a lot of the volatility. So if we look at oil prices, for example, oil prices has been dropping the past 2 weeks very significantly. It does recover a little bit last night. But if we take that into consideration, it's not going to be part of the core CPI numbers, and fresh produce are going to be not going to be part of the core CPI numbers as well. So the things that we're looking at right now, and you have to understand this, the inflation number that we're looking at today, it's actually the inflation that was for last month. So the whole tariff kicks in today, last night officially. Then it's not going to be calculated into the inflation numbers until next month, right? And to be honest with you, it's not going to be visible in terms of the impact on these tariffs immediately in the next month as well. So, inflation numbers in the short term, because of all the whole tariff issues, it could actually go up, and the FOMC is prepared for that, and that's the reason why they're not really in a hurry to cut interest rates, because they want to see the impact on this whole tariffs into how that's going to impact cost of prices, right? And food and energy sectors are excluded because they seem to be more volatile. And obviously, if you take a look at the core CPI numbers and excluding all these numbers there, if it continues to tick up, obviously, that's where the real problem is. So if the FOMC is looking at, what are they looking at? Are they looking at the CPI? Are they looking at the core CPI? Are they looking at both? But when we talk about the underlying inflation, then it will always be the core CPI. The target bands that they set always refers to the core CPI, not the headline CPI, because obviously a lot of stuff can influence the headline inflation numbers, but the more important number is the core inflation numbers. All right, so these are the numbers, and also because this is Thursday, I'm just adding it in there, just so we're not dealing with just inflation number. We're actually looking at the jobless claims numbers as well. Right now, I don't think jobless claims number is going to have a huge impact into the market, but if we take a look at the inflation number, yes, this is going to have a huge impact into the market. Let's take a look at the inflation rate year on year. This is the year on year CPI numbers. Previously, it's at 2.8%. And the consensus and the forecast is for a low number, 2.6, 2.5. And I think this is okay. I mean, if everyone is pricing in for a lower consensus at this point in time, it's completely okay. Because the whole tariff situation that we have right now is not going to impact onto March inflation number, which is what we're looking at. So the consensus for this is 2.6, forecast all the way down to 2.5. That's a 0.3% drop on inflation numbers. And, yeah, if inflation goes down, then I think it could actually boost the market a little bit. But I think what the market is really concerned about is if there's any numbers that comes in above the consensus, okay, that would actually take away a lot of the positive sentiment that we had in the market yesterday, especially in the U.S. economy. Any higher inflation number is going to take that away. But just to be clear here, I want to give you guys a little bit of a rundown into what the FOMC's rate cut expectation has been. Before last night, it was for 4 to 5 interest rate cuts from the FOMC that the market was pricing in for 2025 because they were looking at a potential for a recession. After last night's Trump's turnabout, he changed his mind again after tariff kicks in for 10 hours. He put a pause on all this tariff except for China. The interest rate expectations has now gone back down to 3 rate cuts in 2025. I'm still sticking to 1 rate cut in 2025, barring any recessions. But yeah, so if the number comes in higher than expected, let's say inflation gave a surprise to the upside and a number comes in, at 2.9 or maybe 3%, then it would cause a lot of chaos in the market. We're going to see an extreme volatility in the market, and judging by what we have seen the past 2 days, if you don't know, I posted on the Indonesian Telegram channel a little bit of an information into what has happened on Tuesday. It was actually the most volatile day in the history of the stock market in the past 50 years. So that would equate to the most volatile day for the financial market. And obviously yesterday, last night, you know, we beat that record, right? So last night was officially the most volatile day in the global financial history. And, it does cause a lot of concern that if the number is a lot higher than it is tonight, then it could cause a lot of volatility in the market. So the way we're going to tackle this tonight is going to be slightly different. Usually we do stop loss orders, kind of find that range of volatility and then trap the market in that range of volatility and then trade the breakouts with a buy stop and a sell stop order. Before we look at before I started the sessions anyway, when I last look at the market, I don't think we are in any condition for a buy stop or stop loss order. Just keep that in mind. We just can't straddle the market because the market is not moving in a range. Market is actually pulling back from whatever rally or drop yesterday causes. Now, let's take a look at the core inflation rate here. This is very important. And the expectation for the core inflation rate here is for a drop to 3% from 3.1%. What if the number doesn't come down and it stays at 3.1% or 3.2%? Then yes, it will cause a lot of chaos in the market today. We might see another Wall Street sell-off because then everyone is thinking, oh, you know what? Without the tariffs numbers, the inflation number is not coming down. The FOMC is not going to be able to do anything exactly as what they have been saying, and everyone's just going to recalibrate in terms of whether or not there's more rate cuts. Why does the equity market need that rate cut? So the rate cut it's necessary for the economy as a whole, right? If it's too high, then obviously borrowing costs are just going to go up. And why are the stock market is concerned about that, and it does spill over to the currencies and whatever not, okay? But generally, companies want a lower inflation, and they want a lower interest rates, because then if they borrow money from the bank for operationals, it's going to be a lot cheaper. And a lot of traders want the interest rates to go down because then they can borrow money from the bank for cheaper and then try to find gains in the equity market. That's the logic behind that. And the reason why we do have a little bit of a flip-flop in terms of the equity market as well as the Forex market. Now, that line has been blurred. I don't normally talk about the equity markets during our live trading sessions, but obviously the panic that's been going on revolves around the equity market itself, and it will have a spillover effect into every other thing out there. And last night, why did Trump did a turnaround on the tariff was because the bond market was about to melt down. The decision to come out with the pause on that 90 days happened 6 minutes after the US bond auctions, and that bond auction wasn't doing well. It did fetch a higher amount being sold, but the demand for domestic demands, Americans don't want to buy government debt. So a lot of stuff has been happening with the whole tariff issues as well, and I think one of the main triggers on why the bond markets was selling off, a lot of institutions, a lot of hedge funds, a lot of smart money is saying, you know what, this is BS, right? You're not helping the economy, you're not helping with your own debt, and bond prices are going down. They were doing a little bit of a sell-off on the bond prices. Now that's why you see that yield goes up. That yield that goes up pushes the US dollar up as well. So if Trump doesn't take action yesterday, the bond market would have crashed last night. We would have another severe equity crash. It would also crash the US dollar. Sorry, it will actually push the US dollar up significantly. And that's not something that Trump wants. Trump wants to lower his US dollar, okay? So he's trying to contain whatever's going on. Hedge funds are selling it, and Bank of Japan was selling it, China was selling it. I believe Singapore was also selling in the top 10 list of bond market sellers in the past 2 days. So everyone's just trying to get rid of the debt, the government debt in the U.S. Okay. Okay. So those are the expectations for tonight. What are the potential scenarios? Obviously, this is going to react very differently. And if the inflation number comes in as per consensus, then it's probably not going to be reactive. It's not going to cause a lot of impact into the market. The other thing that could cause a lot of impact into the market is all of a sudden if we see the core inflation rate drops down to maybe 2.7%, 2.6%, and the headline inflation goes down to 2.5% or below, that would boost the risk sentiment. It would actually bring up the equity market. It would push down the US dollar. It would send the euro and the sterling higher. It would crash the Dow yen. Because the yen was gaining last night after that rescue from Trump, because the yield goes up with it as well. So it does have a correlation to the currency market. So it's very naive if we say, hey, I want to be a Forex trader, but I don't really care about what's going on in the other markets. It's not. The whole global financial market is a whole system, just like how we have our hearts, our lungs, and our feet, our hands, right? They function. And they're interconnected. So any fallout in one will have a spillover effect into every other markets out there. And remember that we are potentially in a new global crisis. And when the worst thing that could happen in a global crisis like this is the Japanese yen. And part of the Trump deal, this is not official as of yet, but insiders has been telling me that part of the deal for Japan to negotiate with the US is for Japan to start buying back their Japanese yen. This would trigger a carry trade unwinding, and this is something that you already saw last year in July and August. If you're trading Japanese yen currencies, you know what happened with the Japanese yen going all the way down to 144, and I think it was lower at 140. But yeah. If that happens as part of the negotiation, as part of the requirement for Japan to negotiate the tariff with the US, then it will cause a lot of chaos in the market. It will impact every currencies out there in the world. It will impact the bond market. It will also impact the equity market because obviously cheap borrowing is gone. Okay, so a lot of stuff to take in, I know, and we got about 5 minutes, so let's take a look at the market and see what's going on. This is the sterling. You can see the recovery here on the sterling today, but as a whole, you can look at how the sterling has been. This is something we already talked in the outlook anyway, that the sterling, you can dip down lower for that correction and it might be over. Now Euro USD, very similar situation. At least Euro USD is actually in a range bound market condition. It is currently being capped at 1.10, and as I say on the outlook again this week, that the euro is a stronger currency compared to the sterling. Now the euro, we can take a look at this and say, hey, you don't say that there's no corridor of volatility. Well, there is a corridor of volatility. This is on the hourly time frame though. That means the range is this. That is crazy. All right, I'm not gonna give you guys a trade on this because it's not realistic. This is not something that we can actually hit in one day. That's 265 pips off range. It's impossible for the market to break out of that range in a short period of time. On a 15-minute time frame, there's no range of volatility. Even if I go on the 5-minute time frame, there's no range of volatility. All the way down to 15 minutes, same thing. So there's no buy stops or whatever. It's just impossible for me to do it for you. Even on the sterling, it's not possible. The Dow yen, also impossible. All right, it's not in a range bound market condition. The range that we have here is not a range that we can trade because the range that's available right now here is 420 pips on the Japanese yen. Do you want to put a buy stop and sell stop at 420 pips and trade it tonight? Not going to happen. The next 3 minutes is not going to move the market in that range. The Aussie USD is probably the closest thing that we can say, all right, there is a potential for a buy stop and a sell stop. We can try it on the Aussie here. We can have 62.25 as the buy stop if we want to, and for the sell stop, it's actually pretty low, about 61 about 61 cents. That's 100 pip of range, and we're looking at the 15-minute time frame. So expect crazy volatility, but this is the only one that I can say, all right, you know what, let's do just a sell stop here on the Aussie and do a buy stop on the Aussie. We'll probably trigger the buy stop, if the inflation number comes in a lot lower. But that's pretty much it. The Aussie here is very volatile the past few days because this is a proxy for the Chinese market. And the trade war is obviously a pause for every other countries out there except for China. And the New Zealand USD, we're not going to be straddling this. We just out of that range right now. The dollar Canadian also not going to be straddling this. The dollar Swiss, not possible. Gold, probably possible, but I need you to be a little bit more on the cautious side for gold here. You might be thinking, hey, you know what? This is safe haven, right? If the market is uncertain, we should be buying gold. That's not going to be the case. Uncertainty in the market causes collapse in the equity market. Does have a negative impact onto gold as well. This is a correlation that I have. And I've been trading for 23 years. I've seen 4 global financial crises. So there's a little bit of a disconnect there if you think safe haven in the short term is good. If the market crashes, no, it doesn't work that way. If the market crashes, if there's panic selling in the market, people are going to get it from gold as well. And we did talk about this in the outlook as well. So if you want to trade gold, you can, but just be careful. There's going to be a lot of volatility on gold here. So the buy stop for gold, I want it to be a little bit higher. You need to have it at about 31.50. Don't put it too close. It's just going to trip you. And also, if you want to sell it, someone's already yapping about where's gold going to go, up or down. It's flat right now, but I don't really like shorting gold. So yeah, even if it does go down, we need it to be at about 30.80 before we can say, you know what, let's trade gold. That's the current range that we have here. But I really don't like shorting gold. I'm happy to have a buy stop on gold. I'm not too happy on having a sell stop on gold because I think it's crazy stupid at this point in time. So I'm gonna leave the buy stop, but I'll cancel the sell stop. It's just pointless at this point in time. But for the buy stop, you need to have a stop loss on the buy stop here, and you just need to have that stop loss at below 3,100 on gold. And that's pretty much it. Focus on the release is obviously going to be on the stock market, the Nasdaq. You can see that pop. And if you're curious on that pop, what's causing that pop there? Data's going to get released anytime soon. So I'll explain it a little bit later. But right now, those are the only trades that we have here on the Aussie USD and gold, right? So we'll see what the market numbers are. Should be about any minute now. But yeah. And I'll show you what happened last night, and just to give you like a little bit of a perspective into a lot of the stuff here. So I do expect a lot of volatility, and focus is obviously on the Aussie USD and the Euro USD. And gold. Everything else will trade it after the numbers release. Inflation rate is a lot lower. It's at 2.4%. Core inflation is also a lot lower. It's at 2.8%. So again, this can actually give a little bit of a boost onto the risk market here. So you should be looking at the dollar getting weaker again here, because that would push the yield down a lot. It will help the bond market kind of recover a little bit here. But yeah, that's the number that we have. Core inflation rate growth. Let me just, it's not showing up the growth number here. Core inflation rate month-on-month in terms of growth was below consensus, 0.1%. And inflation rate month-on-month is actually negative 0.1%. So we actually do have that deflation. But again, you need to think about a couple of things. So this would push the US dollar down. But are we looking at a crazy snap in the market? We're not, right? And if we take a look at the equity markets, I don't think we're looking at that snap as yet. This, this kind of inflation number, which is lower than what the market is expecting. The CPI news works on Nasdaq. Of course it works on Nasdaq, right? If we trade the futures, of course it's going to work on Nasdaq. It's just that you're going to have a delayed effect on that because the US market is not open until an hour after its numbers are going to get released. The US is going to be open in about an hour's time. That's when the market's probably going to react to it. But the futures typically react to it very quickly, and we're not seeing that reaction. So something is off. Don't you think something is off? Inflation number is so low, then everyone should be thinking, hey, the FOMC has reason to cut interest rates. But it doesn't have an impact right now because this is our March number. These are numbers before the whole tariff, bazooka, whatever you want to call it, right? Before the clown starts dancing. I don't know, man. I think the whole market has been a circus for the past 2 weeks. But yeah, this kind of number in a normal market condition would have sent the stock market up like crazy. We're not seeing that run up. This is nuts, right? And take a look at the volume today. It's so low. The volume for today, it's very low. Even the currency markets here, it's barely moving. How do you want to constitute this as something moving when the range is 265 pips and this kind of releases, the market just went up 260, it just went up 50 pips. If you go into what a 1 minute time frame, you might look at that and say, yeah, that's a good spike, but there's no follow up here. Can we do something about this? Can we trade this? Even if you go down the 1 minute time frame, you can chase after it, but you definitely need a pullback. Ideally, I want to see the market pull back. Well, support at 1.1, then I'll buy. This calls for a limit order strategy here. I'm not gonna run through this and just grab it. It's crazy, right? But I can create a limit order if you want to at 1.10, but that's not really the level a lot of traders are wanting to buy. This is already extreme. This one can run up. It's fine. Let it break out. How far can it go? We're still staring down on the high last week, right? That was the high last week, about 1.1150. How far can it go? It might go up to 1.17, 1.12, but that's pretty much it on the Euro USD. On the sterling, it's tough. How are you gonna run up on sterling here? And if you take a look at the drop on the sterling here, and we measure the corrections that we have, how far can it go? It's currently stuck at 50%. And 50% was the low, or kind of the order block that we have in the market. And that number is actually very close to 1.3. So any push higher on the sterling right now, and the reason why I don't really want to go long on the sterling right now, I'm not crazy. I don't do this for entertainment. If you guys think that we're doing this live trading session for entertainment, that we need to, let's open a trade, get in, get out, and it doesn't work that way. If I were to just blindly open and say, hi, the inflation number is up, risk assets should go up, let's buy sterling, for example, I don't know, how far can you take it? Because the risk reward ratio doesn't click. The market has already been running up the whole 2 days. That means that even if I buy right now, the closest stop loss that I have is actually going to be here. Does the risk reward ratio make sense? Of course it doesn't make sense, because if I'm targeting, I know there's a resistance at 1.3, right? That's how far I can get out, And then the stop loss is going to be at 1.2865. Price is currently at about 1.2950. Am I crazy? That's taking a 2-to-1 risk reward ratio. So yeah, don't think that we're doing this for entertainment. If you guys are new traders here, and you think we do this for fun, like we do this live trading session because, just get everyone excited about trading and stuff like that, well, that could be some other speakers out there. I don't do that, I'm here to kind of give you guys an update on what's going on in the market. There's a lot of risk in the market. There's a lot of volatility in the market. Call me whatever you want, right? But I'm not going to tell you guys to, buy now. It's good. It's a good run, right? The number there, let's react to the market. It's not. We are in a different market condition. The context is different. The context is unique. So we need to understand the whole thing. That's the reason why I spent half an hour talking to you about all the stuff that's been going on. And that would have an impact into the market. But yeah, if we take a look at this and you want to trade this on an intraday scale, then wait for the pullback. As simple as that. What do you want to do? Is price going to continue to push up? It might, but is it a good time to buy? Probably not. Even on a 5-minute time frame, if you buy it, your closest stop loss is going to be at 1.29. That's 50 pips of stop loss on a 5-minute time frame. Goes to tell you how high the volatility is, right? So just be careful on the market. You don't. I'll be honest with you. Oh man, I really need to close this for a minute here. So yeah, I do have a little bit of a problem with how MT4 has been working on multiple monitors here. I'm running 6 monitors at this point in time, and the the option is just gone in terms of if I create a sub menu, just disappear. If you guys have any, if you guys have any info on how to get it back, but yeah, let me know. Be very interesting. But yeah, so yeah, as I said, this is. Are we looking at reactions in the market? What do you want to do with this one? This kind of numbers here. Do we see a little bit of resistance, for example, on the sterling here? Yeah, we are at the resistance, but not quite yet. So, you got a couple of things that you can do here, because if we anticipate, there's a potential for a little bit of an auto block here, basing it on there. We're very close to that. That's about 50%. You can do a sell limit order if you want to. All right, you can do a sell limit. I would prefer to do a sell limit at 1.3 because there's going to be a liquidity sweep that happens at 1.3. And where's my stop loss if I have that sell limit at 1.3? Then your stop loss at max, it's actually 1.3055. That's your stop loss. And if that's the case, where's my take profit? You're probably going to be looking at yesterday's resistance or support there before the market can just run through and do a little bit of a runner. That's going to be about 1.25-ish. That gives you a good risk reward ratio, right? What am I risking? So we're trading this post numbers here, but I want the setting to go up a little bit. I'm risking 50 pips and for a potential gain of 168 pips. I like this trade, but I'm not going to chase after this. And for the euro at this point in time, fundamentally, it's very hard to go against whatever's going on with the euro. But are we close to resistance on the euro? Yes, we are. We have to be paying closer attention to the high last year, right? That's about 1.12. So there's still room for the euro to go. That's going to be the next available resistance. So on the other time frame, this is very close to it. Are we going to reach that level there? Are we going to go into that range there? Yes, 1.15, 1.12. We are going to get into that level tonight. But should I create a limit order? If you want to create a limit order, you want to, but you can. But then it will be a swing trade. If you want an intraday trade, then watch for it tonight. Let this one run. It's completely fine. And for the Aussie here, it's not going up. It's not even hitting my buy stop. Why? Because I put that buy stop above 0.62. That is the key level that the market needs to take out. And it's not doing it. And are we looking at gold going up? Are we looking at gold going down? No, it's not. It's stuck in a range between 3.110, 3100 and 3150. So none of the orders got triggered here. So I would cancel out the Aussie USD. I would cancel out the Aussie USD here. I'll keep gold. I'm okay with gold. In fact, I would probably lower my buy stop for gold to about 31.35. If it touches, it'll probably run. There must be something that would trigger that run in gold. But I'm not shorting gold. It's crazy shorting gold right now because I don't know when the market is just going to say, you know what, screw this. I'm going to let go of bond market and I'm just going to fly into the safe havens. We're not looking at that. The dollar yen, it's not really moving. Is yen gaining? Obviously, yen is gaining, but is it gaining in such a way that there's a safe haven runs? No, it's not gaining as a safe haven. It's gaining because the yields goes up. The bond markets, it's gaining because the bond markets was saved by Trump last night. And you see that pop on the 50 minutes time frame. That's the pop. That was when Trump rescued the market last night, and because that happens, the yield goes down with it as well. The yield's going down. That's the US dollar weakness. It's not a run to Japanese yen, so there's no run to safe haven as it is. How do you use economic forecasts for 6 months? How do I see it right now? I can tell you right now, we're not in a good situation. Do I see a recession? I'm not going to say it's 100% a recession, but let me tell you something really crazy, right? Market was happy Trump pauses. I'm not happy at all. And I've been trading for 23 years, and I just want to share with you guys how I felt. I'm not emotionally disturbed to the point I'm not able to make clear decisions. I'm angry with how Trump has been playing the market. Remember on Monday, there was a leaked information, right, from Kevin Hassett that Trump is considering 90 days pause. It caused a little bit of a pop. And then within 4 minutes, White House make a statement, an official statement, hey, that's fake news. Don't listen to it. That was Monday, right? And then yesterday happened. Did he plan it? Well, he comes out yesterday and say, oh, we planned the whole thing. Besson comes out and say, we planned it since Sunday. This was the plan all along. We just want to get people, coming into the table. That's not how it works. And Trump's comments on Tuesday night saying like we got 70 countries trying to lick my ass right now. That's not a very good comment coming up from him. That's disgusting, right? And then the bond market meltdown was about to melt down. He got warnings from a lot of, hedge fund managers that, look, if you don't do this, bond market is going to crash. We're going to have another recession on your hand in 3 months. So he stepped in right after the bond auction, which was really ugly. It was actually a really bad auction. And we saw that pop. And that's pretty much it. So why do it? If you plan this all along, why wait until the tariff kicks in, and then 10 hours after the tariff kicks in, you say, oh, I'll give you a pause. Shouldn't you be pausing before the whole tariff kicks in, right? So Trump is obviously baiting China for retaliation. And that's basically the target. So this is now full-blown trade wars between China and the US. Obviously, 125%, it's just crazy. That kind of tariff is just going to kill anything. But yeah, it is what it is. It causes that jump in the market. Obviously, is people buying it? Of course not, because that run up doesn't last very long. So we'll see what happens here tonight, but it'll be very interesting. Look at the currency market. If you had bought, where's it going to go? It's not going to go anywhere. So you just don't trade blindly. What can you trade that spike? How big was that spike? What 20 pips on a sterling? You wanna get in and out 20 pips on a sterling? Liquidity will probably take your spreads like crazy anyway to begin with. What's on the euro? Oh, 30 pips. This is not something we can actually trade. If we don't have that breakout, we don't trade. If there's no market reaction, we don't trade. The market reaction in a normal market condition like this is that the CPI is really low. There's a deflation ongoing right now. The FOMC should be cutting interest rates. But everyone is looking at this and say, this is nuts. No matter what the inflation is, inflation can come in at 2%. And the Fed is probably going to say that, hey, we'll wait because I don't know what the impact is on tariff. And, last week I say, the worst of the worst scenario happened, causes that crash in the market. That's fine. Let that crash happen. Market will recover. That's completely fine. As long as Trump doesn't reverse in 2 days and say, oh, I changed my mind. That's the stuff that the market doesn't need. That uncertainty is nuts, right? January, we had him go up. February, he started announcing tariff for Canada and Mexico. And then 2 days after that, pause it for 30 days. March 4th, same thing. Launch it back, 2 days, pause it. Right? 30 days of uncertainty. That's okay. That's 1 month. This is 90 days of uncertainty, and this is where it becomes really stupid. You got 75 countries trying to make a deal with you, and he said, oh, we'll get you guys a deal. A trade deal done in 90 days is impossible. You know why? Because let me give you an example. 2016, Brexit addendum, referendum happens. 2016 to 2020, the UK had 4 years to make a trade deal with the euro. Brexit finally happened in 2020, and the deal was not even done. It's just one country, 4 years. It doesn't take, trade deals doesn't happen in 90 days. So what Trump is doing is causing another 90 days of a lot of volatility in the market. Should we be grateful? Yes, we should be grateful as a trader. We should be grateful. The problem is your market structures are just gonna go down the drain because it's just gonna destroy whatever market structures, whatever technicals that you know. Last night's pop, just to give you a little bit into a perspective, are you able to pick it up? If you pick up price action, yes, you'll be able to pick it up. But does it make sense if you're using any other technicals out there? No, it's rubbish. And we did talk about this in the theory session. We did talk about this in the theory session on Tuesday, that yeah, Tuesday we're expecting a sell-off. That sell-off happened, it hits high and then it hits low. And then, price action, does it work? Yes, it does work, but you have to keep in mind, these are going to be hot, unexpected news. It causes a lot of volatility. It breaks a lot of technicals in the short term. And the problem with the spikes that's been happening, if you're using moving averages or whatever, it will include that spike. Let me just put the perspective onto that spike for you. What happened here? This is, so yeah, let's push it back, and this is on the 1 minute time frame. I'm probably not going to be able to look at that on the 1 minute time frame, but this is on the 5 minute time frame. This is what happens. If you're looking at price action analysis, yes. Are you able to detect it? Yes. Does it break a trend line? It does break a trend line on the 5 minute time frame before the whole rally to the upside. Does it break a key resistance? It does, right? It actually break 38,000. So it breaks, and this, if you guys are watching this, this is a 5 minutes run to the upside, and it's worth 742 points. Within 15 minutes, the market shot up 2,442 points. You could have made a lot of money out there, right? If you're trading specifically on the 1 minute time frame, on the 5 minute time frame. But if you do not look at these time frames and you're not trading actively intraday, you're looking at the market that was kind of recovering, but it wasn't really recovering in full, right? If you take a look at that, the market was attempting to recover, yes, but from a technical perspective, the market structure is still to the downside. And that's causing a lot of, problems. But was there any signs that the short-term market structure has shifted? Do we see a change of character? We do. Do we pick it up? Yes, it was. You're able to pick it up on the 5 minutes time frame, on a 1 minute time frame if you're trading actively intraday yesterday. But if not, then you look at a 15-minute time frame, you're not looking at any break of structure. You look at the 30-minute time frame, you're not looking at any break of structure. You look at the hourly time frame, you don't see any break of structure. You don't see any change of character. And all of a sudden, you got wiped out 2,000 points in 10 minutes, because some clown decided to pause the whole thing that he keeps saying, no, this is it, I'm not going to change my mind. So I don't know. This is the current market condition that we're looking at. So just keep that in mind. A lot of volatility in the market. Any news, fake news, hoax, whatever, it's going to trigger a lot of movement in the market. So I need you guys to be very careful. Okay. So with the moment I say we don't want to push for a trade, I saw the number of people watching this goes down. But hey, you guys that hang around means you guys are serious traders, and serious traders to serious traders, we want you to succeed. Right? We don't want you to fail. We don't want you to just throw your money out like that and then take a trade that doesn't go anywhere. So don't do that. Right? Trade smart. Use your common sense a little bit. Don't look for that adrenaline rush. We're not gambling. We are trading for a living. And at times like this, we just need to be a little bit more on the patient side. The gold here, we might trigger a gold run. It's okay. But if it doesn't break that level, no point. I just don't want to go short gold, because going short on gold is crazy. The market will just snap it back. And remember, I say this on the outlook from 2 weeks ago. 31,000, 3,150, that's not a good level. And no one wants to buy at 3,150 level. And I'll say, 3,100, yeah, maybe we'll buy it. 3,000, that would be the ideal level. Look at where price bounces off. It was actually at 3,000, right? It dipped lower than 3,000, but then immediately come back up above 3,000. So think about it. Is it a good time to buy for gold? Yeah, if you're scalping, trying to get in and out, and you have no clue what's going on in the market, feel free. That'll be your, ticket to your margin call. Oh, but anyway, what do I see in 6 months' time? I don't, it's very hard for me to completely say that's going to be a recession. But that 90 days pause in the market, that's going to cause a lot of headaches, right? And last year, as part of our yearly outlook, we anticipated a stock market crash. And I said this year earlier, I didn't expect that stock market crash to happen in February, right? I didn't expect that to happen in April. I expect the worst to happen in about June or July. June or July is probably going to be the worst. Looking at the current condition here, that 90 days that we have, obviously it's April, May, June, you're going to get the worst in July. But that's what I can see. So for Q1 2025, inflation is slowing down? Yes. Obviously, since March, if we take a look at the March quarterly numbers, then yes, inflation is slowing down. But this is not a realistic expectation of the market because we know Trump is going to mess it up. Tariff in place, let me just give you into perspective. He comes out last night and say he was, I saved the economy, I saved the stock market from crashing, blah, blah, blah. I saved the bond market. That's BS. You know why? Because right now, in terms of tariff, it is the highest tariff in American history since 1930. Yeah, go figure, That's with him saying, oh, I'm going to pause 90 days. The pause that he's doing is the reciprocal tariff, which, and I've already explained before, the tariff numbers, the way he calculated tariff numbers was stupid. It's crazy stupid, right? It's just a number to say, hey, high percentage, we got to tariff them back high. It's just, I think the whole thing was basically just, a play. But he can say whatever he wants. End of the day, the pause was for that 90 days reciprocal tariff. There's a lot of asterisks into what he said. That pause doesn't pause that 10% base tariff. That was the blanket tariff. That is still in place. That's the bottom for negotiation. So every country out there that's negotiating with the US has to take, hey, I'm still going to charge you 10%, but let's make a deal. Maybe I don't have to charge you 60%. Maybe, we can charge you 20%. But we're still going to charge you 10%. I think that's a bad deal. That's still going to impact the global economy, right? The 25% on auto parts, that's still in place. 20% on aluminum and steel, that is still in place. I'm not ranting, but I'm just going to give you the condition in the market here because I think you guys, have been, attending our sessions here, and I don't really have a lot of time to explain what's going on. And in the outlook, there's only so much so that I can talk about here. So yeah, maybe, we are really doing a little bit of a deep dive into news trading. So I need you to be careful when it comes to news trading here, that the expectation, because then you say, oh, but the CPI went down, right? Why didn't the USR go down? Why didn't the Euro USD go up? Why didn't the pound go up? Why is everyone stuck? Why is gold here stuck? I bought gold because the CPI was good. So the number was low. Gold should go up. It's not going up right now. You can take a look at the reality of stuff here. So then you say and blame everyone, and you tell everyone that, hey, don't trade with Octa because you know why? Because it teaches us this new trading session and blah, blah, blah. It doesn't click. Well, I'm a guy that works in the industry. I know what the hell is going on in the world. I understand economics. I understand fundamental analysis. Well, if you don't want to understand fundamental analysis, then too bad. You need to understand the whole context of what's really going on in the world right now. Okay? So, we're here to help. We're not here to give you random trades. So you got your adrenaline rush, pump it up, and then blow up your account. We don't do that. We do this to educate you how to trade the news. And here, right now, is a very good example on how this news sometimes just doesn't make sense. It doesn't click, because if it clicks 100% of the time, inflation numbers that slow like this should push the US dollar down. It would send the euro up. It would send gold up because, hey, what else does it matter? Inflation rate is going down. Fed's going to cut rate. Oh, that means the cost of keeping the gold is actually going to be cheaper. It should push gold up. Are you seeing gold rallying up right now? You don't. Are you seeing it pull back right now? Yes, you do. Okay? So it actually makes sense. It's just that if people don't understand what the hell is going on and connect all the pieces here, it doesn't make sense. Okay? So, you guys want to tell your friends, next time, hey, next month, come into our live trading sessions, because we actually guide you. We're doing this for you. We're not, we're not here to say, let's just open a trade. It doesn't work that way. All right. Of course, I'm not happy with the pause. Look, in 23 years of trading, I felt a lot of emotions. I just felt a new emotions last night, an emotion that I took to, I haven't been sleeping well for the past 2 weeks. For your information, I've only been sleeping 2 hours every single day. I've been trading from 7 a.m. Asian time all the way to the US close. And that means I only have 2 hours for sleep, right? I look at what happened last night. You know what? Screw it. I'm gonna rest. But I think about it. This whole thing just doesn't click. What he's doing. It's just gonna create a lot of mess. All right. This is Bitcoin. Everyone is saying, "Hey, buy Bitcoin," right? Whatever. Sentiment goes up. It's the same thing with the stock market. There's no logic behind that run there. This is Bitcoin on the hourly time frame. That was the run. I believe that's the run here. On Bitcoin, just to put things into perspective, does it impact the sentiment in the market? Of course it does, right? That's 50. Oh, was that right? Am I not reading it right? $50,000 in an hour, right? It's nuts. Okay, so let me throw it in for you guys. If you trade Bitcoins, why is price like this? If the market goes up before Asian market is open, a lot of Asians, right? They trade Bitcoins. Why is no one buying it and continue that run? Why? Why do you see volume drop off the whole day? Something is off, right? That's what I can say, This is Bitcoin on the other time frame. Sure. What can we see from here? All right, let's base it on technical. What can we find? We have a bullish flag. If it breaks, then go, yeah, buy if you want to. But where can we go? How far up can it go? Well, how far can you go? You're probably going to be looking at about 86,000. Maybe another 5,000 run, 5,000, not 50,000, 5,000 run. $5,000 run. Is that the all-time high? No. Was that really not the all-time high? No. We're not even reaching the high in the month of March. Let's just put that into perspective on the whole thing. That bump up, yeah. Is everyone waiting for a signal to jump in? Yeah, everyone's just on the edge right now. Do you see profit taking happening? No one wants to let go of their Bitcoin when they pick it up at 75,000. That's stupid. That's crazy. That's the reason why you don't see volumes here. And then a lot of traders that didn't, that missed it, and they look at this and they try to justify, should I be buying Bitcoin at the current price level? No, because a lot of traders are going to say, man, that's stupid. The market has run 5,000 points. I didn't get Bitcoin. If I buy now, what if the market comes back down 3,000, 2,000 points? I'm going to lose out. So you're going to find a lot more traders buying Bitcoin, probably about 80,000 to about 79,000. That's the logical way to think about this. You want to buy Bitcoin, buy it at 80,000 if 80,000 acts as support. If not, if it breaks higher, then buy it when it breaks 83,000. As simple as that. If you ask me what Bitcoin is. All right. Let me look at the chat here. I know we are over time a little bit, but it's okay. You guys get a lot. Hopefully, you guys get a lot. You like this? Please share it with your friends. So you understand what what's going on in the economy right now. What's going on in the financial market? Okay. Economic minister in some countries say that with tariff that comes in like that, all the thing that I learned in the university, all basic economy is meaningless. Yes, it's meaningless because the numbers that comes out from his team, it's stupid, right? And what really disappoints me, and this is the reason why I have that new feeling when it comes to trading. I'm not even sure if it's anger. It's more disappointment. It's more like I felt like I got pranked by smart people. These are people that I look up to, right? The whole thing was structured by a team. If you guys don't know who the Secretary of Treasury Secretary is, Besson, right? That guy helped Soros bankrupt the Bank of England. This is a guy I completely respected, right? You don't know who the trade is? The trade secretary is? It's Lutnick, right? This guy, basically, he owns Cantor Fitzgerald, which is one of the oldest and most successful hedge funds in New York. These are very smart people. And Donald Trump, I respect him as a businessman. I don't respect how he does things, but these are three people that I actually admire, and I look at them and say, You know, you guys are smart people. So why do this? Yeah, that's my rant here. All right. Yeah, anyway, back to it. We don't have a lot of trades. Nothing got triggered. The sterling doesn't get triggered. You know, the market doesn't go anywhere. You bought, you lose. As simple as that, right? You look at the numbers, you get smashed. Aussie's not going anywhere. Gold's not going anywhere. Unfortunate as it is, but hey, I want you guys to be safe. And I want you to be a smart trader. I want you to understand what's going on. Don't do stupid stuff. Don't do crazy stuff. All right. Since we're out of time, we're just going to wrap it up. It's been a very interesting month for our news trading session. I know I do things a little bit differently with the NFP numbers. And hopefully I don't have to do that for our future sessions. Hopefully we can go back to the normal sessions, right? Hopefully we do have a normal market conditions that we can actually, apply what we understand about news trading. But yeah, right now, if you're trying to figure out the sentiment in the market, it's just all over the place right now. There are going to be a lot of professional traders out there that are, feeling the same emotion as me. There are some people that out there are celebrating today, making a lot of money because they make a pun on the market going up. And there's a lot of losses in the market with that rally as well, because it would be the fastest short squeeze in the market that we have ever seen. Everything happened in 1 minute, 5 minutes. That's crazy. And for your information, NASDAQ has the largest single day gain since 2001. That's the dot-com bubble crisis. The NASDAQ and the Dow Jones and the S&P 500 had the best single day since the global financial crisis. So go figure. We had the worst volatile day before that, and we had that recovery. All I'm seeing right now is, I've seen 4 global financial crises. I've seen the global financial crisis. I've seen the Euro crisis. I've seen the first trade war. I've seen COVID. And all this rally here really depends on what's going to happen in the next 2 days. If nothing happens in the next 2 days, or something bad happened, and typically it does happen. And for reference, if you guys want to find out why I'm actually a little bit hesitant in the market, especially today, look up 13th of October 2008. That was the day Bank of England and a lot of other central banks bail out their banks. Look at the rally that happened during that day. Look at what happened in the market 2 days after that, relief rally. All right, that's how I'm going to leave it to you guys for this month. It's going to be a volatile month. I'm not going to be there for you guys every single week, doing live market analysis like that. I do that for the Indonesian guys, but yeah, you guys, any questions, you might forward it to the team at Octa, and hopefully they can forward that information, and maybe somehow I can come back with an answer if you guys have any questions on what, if you're trying to figure out what's going on in the market, okay? But other than that, good luck for your trade on April. If you made a lot of money on April, then trade carefully. Don't let your profits turn into losses. Just keep that in mind, okay? There's going to be a lot of volatility. That means a lot of opportunity for us as traders, okay? So good luck with your trades for this month. Stay safe. Palm Sunday, this Sunday, and Easter is going to be next week. If you guys are celebrating, then yeah, enjoy those breaks, okay? Have fun.